So my name is Maryam. I want to talk to you about physical commodities. And in my world, infinitely scalable infrastructure requires and demands a much, much larger playground that perhaps crypto is playing with. And what I want to introduce you to is commodities. When I talk about commodities, I'm talking oil, natural gas, copper, metals, the rare earths that fuel everything we consume, and how much they deserve to be on your radar as the thing to build for. So that's really my talk is, yes, I'll tell you about Watr, but what I hope you'll take away is that commodities is the trillion-dollar gap you should be mining alongside your Bitcoin and alongside everything else you're thinking about. But before I do, I want to tell you a little bit about myself, so you get a sense that I'm not making most of this up. I'm a very long-term commodities girl. I grew up in Shell and in private equity. This is some of the stuff I've had the privilege of being involved in. They are all world firsts, some of which we did. Shell's Prelude was the largest floating object for the extraction of natural gas. I led all of that across Asia Pacific. This little baby is one of my favorite ones, private equity-backed startup where we put small-scale liquefaction and we took natural gas from rubbish and fueled so many things. We invented the world's first LNG-fueled rigs, which were very clean. If any of you know natural gas, we drilled most of the shale gas plays in the US using our infrastructure. We got bought up by Cargill and Shell, but that was one of my proudest moments. Then in Shell, after we got bought up, I had the privilege of being involved with some of the very first blockchain platforms that were used for oil. I co-founded and chaired a holding company that most of the world's energy traders and most of the world's banks were involved in for post-trade processing of Brent crude oil. One of my favorite headlines is this one. We launched to 67% market share in Brent crude on day one. So when I tell you that scale is possible, it's possible with blockchain, and it's possible with the infrastructure and the flows of the big boys. Really, I'm talking from experience. Many other projects came out of the holdco I chaired, including the world's first intended DeFi liquidity pool for financing commodities. This is 2017, and it's still going and backed by most of the world's largest trade finance banks. And then my next iteration was saying, hey, there's all of this stuff happening in the world of Web3 and blockchain, but everything we were doing as an industry was in closed systems. We weren't tapping into the ecosystem. We didn't understand community, and we weren't building in this open ethos that all of you are so familiar with. We were building siloed projects and really using blockchain like a spreadsheet. So what happens if you actually go out there and try to create a fundamentally new infrastructure that allows commodity supply chains and commodity value chains, the flows and the financing, to come on chain in an environment that allows the world's largest players to play alongside the entrepreneurs and the industrialists? And that's Watr, and what I'll talk to you about. I love this photo, and actually my friend James, I see him in the room, James and I were invited to speak at OPEC when we launched some of our first projects, because it was the first time you had digital twins of oil projects and you had Brent crude being on a blockchain, and the Secretary General was tweeting about our work. So a very parallel world to yours, right? We're sitting in these crazy rooms getting excited that they're talking about our work at that scale the same way that you are. I propose a marriage is long overdue, and that there are many ways in which this room, this community, should be tapping into the flows of this world. But before people can tap into them and before we can open it up, we kind of have to understand if it's relevant for the industry to be opened up. And I propose that they are, because the way we've been trading commodities is really antiquated. And in many ways, it's designed to keep newbies out, right? There's so much money to be made that it doesn't really make sense, especially if you're one of the large traders, to allow others to come and participate. The barriers are high, and I will hopefully leave you with an understanding that the barriers are high in two worlds. One is financing, and the second one is in just compliance. It's really hard to get this right. The second thing is contracts are rigid. They're designed by the incumbents, they're held on to by the incumbents, and I come from Shell, so Shell's one of the incumbents, and we used to work very hard to preserve the status quo because there's a lot of value in it. And the third thing is, because those two things are true, new liquidity is locked out. And unless you're a traditional financier to this world, you will not get in. You can do things like write them a check and say, hey, I don't want any returns and I'll finance your trade, but I would propose that's not the smartest move. It's big bets and big profits. I kind of just want to put some numbers in your mind so when we think about this world, we start to get a sense of dimensions, right? Like some of the big trading houses, $28 billion in 2 years of profit, $6.8 billion paid out to the partners in 1 year, $120 billion of cash piles that they don't know what to do with in the trading environment. It's a lot of money. And so everyone wants to be part of it. The problem is it's really not for the faint of heart. And the next visuals aren't meant to scare you. They're really just meant to show you that, you know, I go to conferences and people show up and tell me they're going to tokenize oil and put it on Binance. And I go, are you really? Do you know what that actually means? So it's not for the faint of heart because we can't afford to do silly things. Because these things happen, and these things are happening to people and organizations that are the leaders of this industry, right? You can't mess with compliance. You can't mess with understanding what's a derivative, what's a security, what's not, where you should put this. But everyone keeps playing because all these people are also making the hundreds of billions of dollars of profit. So if this ever goes forward, I want to give you some more numbers because I want you to think about how it is a prize worth getting right. I talk about this number all the time. I'm really bored of it. My team's bored of it. But $20 trillion per annum is the physical traded commodity market. 20 trillion. What's even bigger is what happens when you go into the financial instruments that represent that physical market, right? So that's all commodities. This is just financial instruments per annum on oil futures, right? It's insane. Do you want to know how big it is? That's all of digital assets. So when we talk about real-world assets, I propose there isn't a bigger one of these. And I also propose that this is one that fundamentally needs innovation, where we're not going in and bulldozing our way into the system because we want to, but because it actually needs help and where it needs the most help. This gap in commodity financing, not trade finance alone, but financing the resource, financing the commodity, is just a little bigger than this whole industry combined. So there's a place for us to play. So if there's a prize to win, and the backdrop of this is all the scary headlines I showed you, what do we need to do? I propose it doesn't need disruption, but we just need to open it up. How do you open it up? By bringing in new liquidity, leveraging updated infrastructure to do so, and enabling many more participants, namely yourselves, and the liquidity in this market to come in and be part of its future. So how do you do that? And how do you go from a place like Shell, where we're building all these siloed ventures, to a place like crypto, which also does siloed really well? And how do you create something that actually comes together? Where our thesis is build the connective tissue, architect its future structure, and then work with yourselves to get everyone to come and play. But alongside you, we work with the giants of industry to also come and play. We see Watr really as the connective tissue that weaves the legacy participants with the new world. So we're working to make sure if industry is my old world, tech is somewhere in between, whether it's decentralized AI or traditional tech, the entrepreneur has a room at the table, and we're able to create new openings for new liquidity and new traded instruments. So how do you do that? We think about getting to this world, right? If you build, you have to build a connected ecosystem. These things have to be interoperable. If you think about the flow of a molecule of oil or natural gas or uranium or copper to where it is consumed, that is a connected supply chain. It's physically connected. The money flows, the participants flow. These siloed projects that try to tackle one piece of it, they cannot make a dent in this whole ecosystem because we need an ecosystem approach. So our focus as NEO, which is the commercial entity that launched Watr, is really to bring liquidity and tokenized exchangeability on this layer one infrastructure that we're about to launch on Avalanche. And we have two things that we use to weave every project together, in addition to liquidity and the tokenized exchangeability. We call them Watr IDs and watermarks. Watr ID, I'll tell you what these are, but what we imagine is a world where everyone else is building these applications, leveraging that, and leveraging our networks to get into the resource holders who can give you access to flows, to liquidity, etc. What's Watr ID? That's really your master connected on Watr. It's know who your counterpart is, know what business they do, and establish that layer of trust so that it is interoperable and transferable, not just between projects, but also between chains. We don't care if you're on Watr or if you're not on Watr. We just would really like you to use Watr IDs so that if I want to do business with you, or if Shell wants to do business with you, or if BP wants to do business with you, the fact that you've gone through this onboarding once means you're available to work with everyone else. Any of you who've tried to work with a giant will know how painful and long that onboarding is. We hope to facilitate, expedite, and enable that to happen much more faster. And that's really the identity layer that sits on Watr. And if you remember, so many of the scary headlines I showed you, they're really about people doing business with people they shouldn't have been doing business with, right? And you eliminate so much of that risk by having this interoperable identity. The second piece of identity that we create at a protocol level is what we call watermark. And that's really the asset layer. So if Watr IDs are who are you doing business with, asset layer is what's the business you're doing. It's really track and trace and programmability throughout your supply chain. And we've done this in practice with some of the giants of industry. We've had the privilege of working with Rio Tinto and General Motors to actually go through the end-to-end of automobile manufacturing, from mine all the way to a hood of a car. Because if you think about commodities, it's really all the raw materials that go into everything you consume. How cool if you can make that programmable, trackable, traceable, but not just for ESG, but think about a world of tariffs. Think about a world of profit share. Think about a world where fundamentally new ways of transacting are coming to life and they could use these rails. And so for us, this work really laid the foundation of showing how identity and watermarks come together to create this new asset class that's genuinely tokenized, and it's going into some of the largest manufactured supply chains on the planet. What we're working on now, and I hope to be able to mobilize your energy around, is, okay, so we know who we're doing business with, we know what business we're doing, but when it gets really interesting is, let's bring liquidity, new liquidity, to actually create liquidity pools and exchangeability. But I don't think we need to go and create synthetics or bring what already exists. I think we need to solve real problems, and there are parts of the value chain and the traded life cycle that don't have traded instruments that we are working to introduce into our liquidity pools. So we're going much further upstream, we're going pre-production into the part of the market where there is no traded index, there is no price, there's no futures market. And instead of building that out in a traditional TradFi format, we're building that out in a tokenized exchange on-chain. And I think that's really powerful, and it goes back to some of the stuff I heard Santi say this morning. How do you onboard the bigger economy? Well, you do that, I think, by solving a real problem and doing it in a scalable fashion that actually brings new optionality to the world and brings new liquidity where liquidity is needed. And so my time's coming up, but my call out to you is join us, because this is about expansion. It's about expanding the commodities pie, the liquidity that comes into it, and the use cases for crypto and cryptography. And I hope you'll reach out to me. I hope you'll come build with us. And if you don't want to build with us and you just want help with intros to commodities, still come talk to us. It'll take a village to do any of this, and I really hope that we do. Thank you.